Hello, hello, hello. Happy Tuesday. How is everyone doing today? Looks like my Twitter account is partially working. Not fully, but partially. Thanks for thanks to Sterling for monitoring it yesterday and letting me know when he saw it unbanned. Boy, this has been frustrating. Good morning, Jacob. Oh yeah, you see the pick, the Veep pick. Good morning, John. Where is that? Good morning, Sterling. Tim Walls has been the person who oversaw the burning down of Minneapolis. Yeah, there you go. Patrick, you should know him quite well. Patrick living in Minnesota. His daughter living in Minnesota. I think you're still in Minnesota, Patrick, unless you got smart and got out. Good morning, Ro. You're going to say good morning, Patrick, again. What else do we have? We have cat results. I saw those earlier, and it did miss the what's. Remember, most important thing: missing on revenue, not EPS. Missing on revenue. Cat missed on revenue, but it was a slight gap up still before. Good morning, McRangers. Can you? I mean, I don't know. I understand this pick at all. I don't understand it. First off, never would vote for Kamala. So, B, you already got Minnesota in the bag. And now you pick somebody who, like, with all the riots, like, oof, I mean, that's an easy target. You already had Minnesota in the bag, anyways, because they're not voting Trump for the most part. Why would you pick? I don't understand the pick. But that's just, I don't understand much anymore. So don't look to me for answers. I don't even look to me for answers. What else do we have? Fed daily minds are open to cutting rates in coming meetings. Why do these people just want to hear themselves talk? I mean, literally. Is there any point? We already knew that. Oh, gosh. Oh, boy. Nikkei unofficial closes up 10.23. Really keep an eye on Nikkei. Also, keep an eye on the yen. If the yen bounce starts failing, watch for the next leg down. Hello, Charles. Good morning, Martinez. Good morning, Royal Palms. What else do we have? Good morning. Hey, Heinrich. Still here south of the river, 22 miles from the city center. At least you're out there. Good morning, Eric. All right. Well, we had a little bounce yesterday. Little bounce. There was no significant bottom pattern, and the bounce was not strong enough for yet a V-shaped reversal. Could we still get stuff out that just we rocket higher? Sure, because the stuff. It helped the markets tremendously yesterday. That a lot of E-Trade down, Schwab down. I still have a token Schwab account just because I never bothered fully closing it. Could not log in for 2.5 hours. Not that I need to do anything, but come on, you have the market dumping and people just couldn't log in. People couldn't execute trades. So that would probably help the market, sort of ironically. But really, you're all these systems are down. What kind of everything's built on a house of cards. Oh boy. So but still, and the people I get still buy the dip crazy. Oh, this is you just gotta buy. You gotta buy the Nvidia. The pullback, you know what? It's way overdone. Nvidia to the moon still. We're still people aren't afraid. With yesterday, there was no fear. There was fear from a VIX standpoint. From that standpoint, it was overdone. But from people on the street, it's like, nah, buy the dip. Okay, that's fine. Buy the dip. You know, the market's a bargain now. The market's a bargain. Schiller PE's back to 33.5. Yeah, it's a bargain. Whew, what a bargain this market is. Yeah, this market needs to really flush things out. But does it have to happen right now? Not necessarily. Because also, I mean, if you look at the uh, the more, I call it maybe more rational FinTwit guys, they were, the end is near. Well, you're calling for the end is near, and everybody else is calling for buy the dip. You're probably both going to be wrong. Probably do kind of, we might be grind down a little longer, and then we'll have to see. We'll have to wait for some setups, but then we'll probably get a rip your face off rally going into September at some point. Remember, cycles are getting back to the bottom. So today, did anybody get the red book numbers? I did not, and this isn't refreshing correctly again. This is so aggravating. So let's see. Red book, nope. No red book numbers. If somebody has them, could you put them in the chat, please? We had the bounce of trades, import and exports. Nothing shocking there. It's just a very quiet day. Household debt, but nothing that's really going to move the market. It's all going to be headline stuff. So far the map, you have Apple pulling back. Sterling put that in the chat. You have Nvidia, little bounce. It's rushing back into the mega caps, but nothing really. You got Lilly. Remember, Lilly earnings coming up. What else do we have? We have the groups. We have everything positive today. Real estate. That's the other thing. Oh, mortgage rates dropping. Every real estate's recovered. Real estate's recovered. It's going to go up another 10% now. What? Everybody's lost their mind. FedWatch still has double rate cut priced in for September. And based off even the Fed comments, yeah, they'll probably at this point cut once. But a double cut, taking it down to 4.25 to 4.5 by the end of the year, was starting with a double cut. Not seeing that, but crazier things have happened. In terms of earnings, today we had one of the key ones I was watching was Caterpillar. Palantir was a beat yesterday and gapping up, still holding the 200 SMA. Caterpillar was a miss on revenue, which is sort of big for a company like Caterpillar. After the close, you got Airbnb, Rivian, Supermicro, but nothing that's going to be market moving. And tomorrow morning, we got Shopify and Walt Disney and CVS. So that's where we sit there. I mentioned Lily's Thursday before the open. Who else do we have in here? Good morning, Richard. Hey, Coco. All right, so where do we stand now? Right now, I'm watching. If we do pull back from yesterday's little run-up, the key thing I'm watching is this 51, 89, 50 level on a closing basis. If we pull back there intraday, especially the 51.22, we'll be watching for any key support, not just because it's the here, let me zoom in. Not just because it's the 50% harmonic to 62.5. You also had a lot of support established there yesterday. So that's going to be very key. You see here between that 50 and 62.5, you see this very key support. So it was resistance, and then support. So that's the key level I'm keeping an eye on today if we pull back. Other than that, rally would be yesterday's high area, about this 53.42 area, to the potential gap fill from Friday to 53.76. So that would be my next target to the upside. If it can do something. Is this a little mini double going into the open? No, it's not, because the second and third targets are beyond the move that started it. However, if it can sustain a move back about 52.72, we'll probably retest the high area and then potentially break out. And the key magnet price is still the closing from Friday, the overall major key magnet price, which would take it back to the daily rotation zone. I'm still expecting a rollover play because of probabilities. We did close below the 62.5 yesterday. The 62.5 from this one right here. This 52.47.75, which means the probability still shifted to retest the 50.58 area, which is also where the 200 simple moving average is. So that probability-wise, again, not guaranteed-wise, but probability-wise, and just being a magnet with the 200, which that would be the first time we've retested the 200 since we broke above it on the big rally since the beginning of last November. That would be a very key magnet price area and probability price area. So that's what I'm watching for. Could it just bounce from here and go on up? Yeah. Also, down below, you have the target line for the wedge. So there's a lot of target areas down here and the major support from April. So that's what I'm keeping an eye on. And especially remember that little 62.5 I put on here. If we start closing below it, this 51.89.50, if we get a 1 hour followed through by a 4 hour close below that, then I'll really watch for a retest of Monday's lows. And upon breaking that, then I'm watching for that to go down and probably find that 200. Find that 200. Remember, daily cycle still heading down. Weekly cycle still heading down. So we can still have some down cycle pressure. Could somebody from the Fed come out and say, 50 is now on the table and the market just goes on a rip roaring screaming up high? Yeah. That's why it's probability based, not guarantee based. But, so where we sit in terms of the NASDAQ triggered a little double, coming up first and second target area, not full second target hit. Little thing here, is this a valid little mini double? No, but you start breaking above, even start getting above about 18,200. Again, I'd be watching for, because we still have the little mini double from yesterday that's triggered. Stop reduction is definitely hit. So the invalidation point, the furthest point away, if we close on a 4 hour basis below 17,758.25, the double's over. Or if we trade down through 17,622 on any pullback to the open, 17,895, so roughly 17,900, which is also this retest from yesterday, is going to be very key. That would not still invalidate the double, but that's the 50% and some very key support. So I'm going to be watching that specifically. Same thing. We tested the 50 EMA on the weekly. We still have a little more room to potentially run down with the cycles. So I'm keeping an eye on that. You can see here with the daily still heading down. This isn't a super strong bottoming pattern yet. This double can continue to play out on the NASDAQ also, fill a gap, and retest the rotation zone without being a major correction just yet. The Dow, we still have the magnet prices lower area with the 200. Again, this is a very strong magnet price for the Dow. So I am watching for that, especially with the Dow closing below 62.5 yesterday. And the magnet price is all the way down to roughly 38K, right below the 200. So, and you see the prior very, very key support here. So I'm going to keep an eye on that for another push lower in the Dow. Major resistance at this point for me in the Dow is about this 39,570 area. Russell, tapping the 200 and a pretty key support area, but closing below the 62.5, so we can still see probabilities to the downside. The magnet price is 1966.4 based off probabilities. Again, not guarantees. Very key resistance is back to 21.18 area, which is the close from Friday. Right in that, the technical close from Friday is 21.18.5. And we'd have the hooking over 50 right above it, a prior major resistance shelf, and the declining rotation zone. And no very strong bottoming pattern. The VIX, again, we've spiked yesterday, but look at this recovery all of a sudden. The fear just, nope, not sustaining at all. So, still very elevated. We need to start dropping back below 30 to get more of a sustained rally on in my book. Still being elevated, we could get another downward shift, which could push it temporarily higher, but the biggest fear just evaporated super quickly. DAX, we closed below the 200 yesterday. The magnet area I'm watching for the DAX is a 16,850. On any rally, I'd be watching this. We have major support becoming resistance now, right around here. And it's the prior 25% harmonic and the declining daily rotation zone. So around 17,950 would be a target for any bounce play, but then I'd be watching for a rollover if it can even sustain that. Notes pulling back to very key support now with the rising rotation zone. So we'll be watching for key support 112.30 to about 113.08. The magnet price is still 115.18.5. The yield bouncing off to 75. Resistance is now 3.9. Still, we could easily see 3.46 to 3.5 come in over the next few weeks. So any rallies in this, I'm really watching for rollovers. Now, is the 10-2s reinverted yesterday, but it's still, I'm expecting this to continue to climb higher, even on a pullback to about net minus 15 basis points. That would still be coming into a very key support area. Dollar index, little bounce here, still watching for the remaining of the double and this 87.5 price target to come out, which is 101. Very strong resistance back at 103.20. Crude, we do now have, this would not, even on a turn up, I would not do this as a horizontal line head and shoulders, because this pullback has now formed a potential little mini double. That would be the only bounce play in crude. So I'd need a 4-hour follow through close above 74.56. And that would be a bounce play only. See, it's against the daily rotation zone. So even my first target would personally be about 76, unless some major stuff breaks out in the Middle East, which I'm still keeping a very close eye on, because that could rocket oil. But we're against a very, very key support area. If it turns down, holds here, still the magnet price is 70.21 based off the 87.5 rule. Gold, not much to talk about. Long term, still in bullish mode a bit longer. Unless if we do get another substantial leg down, we'll watch for probably some more liquidation of gold. But as long as gold does not close below 21.93, long term it's still bullish. If we close below 21.93, we could see a much more sustained pullback. Silver, we've again hit the first target twice. Still, my major target is this 26 area. Yen has not been able to sustain a bounce yet. Again, this is the yen strengthening going down. So if the yen continues to strengthen and can't get much of a bounce, also keep in mind that there'll be more unwinding over the next bit of the carry trade. So, and that can put substantial pressure on the global markets to the downside. I see your comment, Richard. Hold on. Spiders, same thing. On any bounce at this point, keep an eye on the daily rotation zone and the magnet gap fill price to Friday, 350, 532.90. Other than that, the overall still downward magnet price is 502.77. We're above yesterday's close, so on any pullback into the open, 517.38. The Qs hitting the 87.5 and reversing off it. So the 87.5 rule has been triggered in the Qs. It's been fulfilled. Any bounce price to the upside, my first target would be to the gap on Friday, 448.75. If we retrace a bit after the open, we're going to gap up 435.37 as key support. Bitcoin bouncing yesterday off the lows, but still, this is the lowest close since the 26th of February. So this did some substantial technical damage. This has to really do some heavy lifting to get into bullish mode. I'm going to still be watching for rollover plays, especially with Ethereum still only hitting the first target on the massive weekly double top. And Ethereum, very key resistance back at 2,800. Tesla, still trying to regain that 200 from the underside, but no close below 62.5 with the gap down, but the close up above it. So the probabilities have not shifted yet. And it completed that double. Oops. It completed the double. So I'm going to be watching on any continued bounce. 215 is very key resistance. NVIDIA, remember, completed the double, but we did not trigger the 62.5 rule yesterday because it closed back above 100. So we'll be watching again. About 110 is very key resistance. Still, if we roll over and close back below 100, the magnet price is back to 83.70. FXI. Follow up on FXI short targets daily at 24 and 21. Any thoughts? 24s, and that I'd make it right in front of 24. I personally, if you were using a target area, again, I'd watch for rollovers on this, but I put your target just in, let me get this out of the way, just in front of 24. Personally, like, 24, 25. Then if it follows through and then rolls over and closes below 24, my next target would be 22. But overall, I agree. This would be continued pullback area. This is a major support zone, but any bounce would just be a bounce for the time being for the China large cap ETF. Hey, Christoph, good morning. Where the heck has Bob been? It's tough when we're on these very different time zones, and it's also tough with my internet connection to bring Bob on and have any guest interviews because of upload bandwidth limitations. I still have not been able to get Cox internet installs since I got here in April. That's how pathetic it is. So that's where we sit there. Let's just peek at the open. Going into the open. Again, just pay close attention. If we start breaking below these post-open European lows, this around this 55.25, we could easily pull back that 51.95 area. I'm going to put this back on just for my sake. So my first target would be 52.1275, and then 51.89 is key. But that's what we're watching for, should it roll over into the open. Just trust. I'm coming up with that. Yeah, sometimes you want to make your targets just in front of the very key levels. Don't try to eke out pennies and risk dollars. It's a lesson I had to learn too, Richard. So, it's a lesson I had to learn. Because of watching the live streams the past 4 years, I'm able to turn the corner of profitability through fib retracement strategy. When I hit that number, I'm taking care of you. Well, Christoph, I'm just glad that I can be here to help you on your journey. And the journey does take time. Anybody who thinks that this is something that, it's not like 8 weeks to learn how to master the markets, turn 10,000 into 1,000,000 in 3 months. No. If you stick with it and start thinking in terms of probabilities, price structure, and refining what works for you, I'm just hoping I can lend some techniques or some at least consistency to show how I'm not all over the place. There's no new magic indicators thrown up every day. There's no new things. I might use some stuff I don't teach in here, and I'll teach an interesting displaced moving average strategy I use for entries at times. But it's very consistent. That's what I'm trying to show you, and put the probabilities in your favor. There's no guarantees in trading, and manage risk. Rewards take care of themselves. So a 4-year journey on something that can last you the rest of your lifetime is it. You know what? People go to college, which is a bigger waste of time at this point from my viewpoint, for 4 years. So spending 4 years doing anything is worthwhile, especially if you do it consistently day in and day out. You're going to learn something, and once you get it down and really mastered it, then that's a skill that, again, can last you the rest of your life, whether it's trading or any other skill. So thank you, Christoph. Thank you for tuning in. And thank you, everybody, for tuning in and spending some time with me. I shall talk to everyone later. Still, the key support is holding in the S&P, but I'm just going to glance at the tick before I leave. The tick, and not a super strong opening. So if we actually get some selling pressure and a tick turns back below zero, watch for this little support base to possibly be broken and retest those key areas from yesterday. Self-control is valuable. And wait for your setups. There's always another trade. So don't force anything. Don't try to call the tops or the bottoms. Wait for your setups and execute them. And be willing to take the losses when they're wrong, because nothing is right all the time. If you can get that and then practice your self-control, which is a very good point, Jake. This is your college, plus I've also been working as a real estate professional, so fund this, haha, I'm 26, but I'm trying to be a millionaire by 30. Well, that's a great track to be on. And just get there responsibly, because then the people will not take it away from you, Christoph. Have I been talking about day trading? I talk about all kinds of trading, Coco. And why only 1% of, just look at success in any industry. What do we have? Well, who owns most of the assets? It's the top 1%. It's the top 1% of anything. And I don't think day trading is right for a lot of people, but I don't just preach day trading. I preach more swing and longer term trading. I love swing trading. But it doesn't matter. So many people overtrade and they don't follow even their own rules. They're trying to get rich quick instead of learning a skill that could help you get rich quicker, as Christoph has a plan to be a millionaire by 30, but it wasn't get rich quick. Yes, do not overtrade. Overtrade, A, the more you're overtrading, the more exposure you have. B, you're trying to chase a market instead of wait for the market to come to you. Working on the second Masters from Mike Arnold. That's funny. Oh boy. So see, I'm really proud of and again, so if you have the skill from trade trading, swing trading is just I take on smaller positions and for like the slightly bigger swing. Okay, it could be the week swing, the 3 day swing. And you'll see that like when I point out 4 hour doubles, that could be a swing trade, or daily doubles or percent B buys, that can turn into swing trades, or percent B sells. So it's just taking it's not trying to call things intraday. By the way, I was just watching the tick breaking down. So far, these lows have held this 52.30, but really pay attention to that. Again, waiting, especially in the open, waiting for the setups to appear on the open is very, not just rushing in and trying to over trade an open is also key. Yeah, you have confirmed my correction. Well, this place is capable of 2 gig. Next door has 2 gig. Across the street has 2 gig. I have 0 because they cut the fiber in the street when they replaced the sidewalk. And I can't get it repulled. It's just this one house in the whole neighborhood. They cut the conduit. That's the problem. What are the odds of that? So, yes, but definitely if you're trading, make sure if you're going to move, I check like we're still looking to get a house. But one of the first things I check is because we're looking on land a little farther out there. I if I can't get proper internet, it doesn't matter if it's the perfect property because if I can't get proper internet, I can't work. My wife can't work. So great, we can sit at home, and you know what? And I'm not going to sit and try to rely on something like a Starlink to stream and trade. Just not happening. My wife can't do her calls. So there's no point. So one first things we check on, I'll be honest, we check on internet, and then I also, because of where we sit in things, I get a preliminary home insurance quote. Let's say everything else lines up with the home, I get a home insurance quote because I've seen some insane stuff. Like, oh, this property is a block too far from the fire station. Instead of a 3,000 annual home insurance thing, it's 10,000. Well, think about that. That's an extra 7,000 just getting flushed away by home insurance because it was a block too far from a fire station out there. Again, that's just additional cost. Yeah, I gotta weigh that in. For some people, it might not bother them, but I don't want to pay insurance companies more than I need to. I look at also property tax, one of the first things, because there's some areas that have insane property tax, even out here. Like you can go across the street. One place could be 2,000, the next place across the street could be 6,000 for the same size house, just because of a boundary it crosses with the property tax districting. So I look at all that before I finalize anything with where I move. It's all a trade, and I got to weigh risk reward. Yeah, I'll see if we could do that maybe for the September one. Coco's dream is trading while traveling the world on a cruise ship. Then I'd really focus on slightly longer term trading. Because you don't want to get stuck trying to day trade from a cruise ship. Wait for your bigger term setups. Wait for the bigger setups. And you can trade smaller, especially with mini and micro contracts. You can trade. People used to say, I cannot trade the futures because I can't get my position size small enough. Well, you can with micros. All right. And watch for those daily and weekly, especially, what great setups. Watch for weekly percent B buys after pullbacks. Because you can get into something on a day, not a day trade, but on a daily basis. And then if it follows through with a weekly percent B buy, that's something you could just let run, potentially. All right. Well, Elon, if Elon doesn't like anything, I've been my streaming. I used to stream on Twitter or X or whatever, every day, and even now, thank I God I got my account unsuspended, which was a nightmare. Uh, I can't stream anymore, and God forbid you criticize or even say Tesla should go down. Boy, if you say Tesla should go down, well, it's a trade. I'm not criticizing the company. I'm saying it's a trade. It's overvalued. But my gosh, your account gets into trouble. And I still can't stream there. That's why I just post a YouTube link now. Oh boy. What is the realistic goal? I'm not going to cite percent returns because how do you. All right, I'll give you an example. Are you executing the trades with options? Are you executing on futures? Are you doing stocks? Because futures, you could get more leverage than just playing the spiders or the Qs. Again, it's how you're executing and what leverage you're using. And that dictates percent return. All right. And it's how good you are. I just don't go up and say, you know, just because there's a setup does not mean there's a trade. So I don't give out services anymore. I don't give out trade. Too many people screw it up anyways. It's ridiculous. You say, all right, here's the entry, here's the stop, here's the target, and people, even with that, can't do it. So it all depends. I think it's very irresponsible for people to throw, oh, your return is 180% a year. Based off of what? Based off of how many markets you're trading. How are you executing? What's your account size? Because if you have a $1 million account size versus a $10,000 account size, your returns can be very different. And then what kind of leverage? You know what? You don't have to use, let's say you're just trading stocks. You don't have to use any leverage. You could just trade dollar for dollar, or you could margin it. Or if you have an eligible day trade account, you could go 4 times. So that all matters. So these people say, oh, you can get, just follow my simple strategy and you can get 50% return, blah, blah, blah. They can't promise that. It's actually irresponsible to promise that. See, breaking down that level, this is exactly what I'm talking about. If people are trying to learn to do stuff. So it's been trying to break below zero. It's chipping away at the zeros, but look at this. It's starting to break down. So again, 52.12.75 is first target, then 51.89. Now, if we can't get any follow through to the downside, I'll be watching for a pretty decent bounce. All right. It's not, from my perspective, it's not good enough for trading, especially if you get any weather. So, all right, everyone, I got to run. Now we're starting to get into a pretty interesting zone for me, so I got to run. I shall talk to everyone tomorrow. Have a wonderful trading day. Bye for now.